16. We had it again, but this time we're here with Bayani.
Bayani.
Yeah. And we're going to talk a little bit about stocks, a little bit about. Well, I was looking at Yeti. What were you looking at?
Last week I was looking at Nikola just for the fun of it, kind of like a shorter term stock.
Okay. Are you invested a little bit into it at this point, or?
Yeah, I invested a little bit. It was kind of more of a gamble, but it actually turned out pretty good. They just released like a newer truck or something like that. Like
No, our semi truck, right?
yeah, like a different. I think the other one. I'm not too familiar about it, but I heard that they were releasing this new truck, so I'm like, there's probably going to be some decent hype. The financials are really crappy on the company, so I don't have much faith that it's going to be a long-term thing. So just doing a short little, investing,
Little gamble to see.
Little gamble.
It's been working out so far, right? You said.
Yeah, up a little bit.
Up a smidge.
And then this guy's leveraging.
Really?
Leveraging a little bit.
Some, yeah.
You're doing
options.
Options? Okay.
Yeah.
Nice. Oh,
bought some options, was it a month out?
Okay. Nice.
And not far out of the money, but it's such a cheap stock that like out of the money. I think I got $1.50 call, and it's like $1 right now.
Okay.
So it's just gotta go up 50%.
Nice. We got in at 8. I think I got him in at 81 cents.
Okay.
So.
And what it's like? What is it now?
$1.01, I believe.
$1.04, yeah.
Nice.
My option, it went up 14% last trading day, and my call went up like 150.
Oh yeah.
For the leverage. Yeah, we'll see what happens with that though.
Cool.
Because I don't really have faith in it.
No.
Well, because it's kind of like at that like conceptual stage, right? For the most part. I mean, I
remember trading it like in 2020.
Okay, right before that was pump.
Yeah, anything that had to do with electric vehicles
was pumping.
Yeah, or hydrogen. Anything that was not gas-powered vehicles was going crazy.
Right.
Yeah.
Right. Yeah, and that's kind of the government wave as far as incentivizing everybody to kind of switch off of fossil fuels and whatnot. So it makes sense.
Have you guys ever heard of Workhorse?
Workhorse, no. What's that? Manufacturing electric vehicles.
It's very, very similar to
Nikola?
what's going on with Nikola.
Okay.
But they might be a better option. That was another one I was looking at before because they're actually doing their stuff. So, Workhorse numbers. Drive 150 miles on a single Workhorse all-electric truck.
Okay. They do semis then, or is it just?
Yeah.
Looks like it.
Yeah.
Or these are like.
They're not really semis. They're
kind of like small vans, like Amazon van type of light van. Okay.
Yeah, they were doing these ones.
Okay.
But they're actually doing stuff.
Interesting.
So there might be something to look into a little bit more.
Yeah. What's their?
Let's see if we can look at them on the stock market.
Yeah.
It's all typed in on the computer.
That's right. It's gonna be on a computer.
Yeah, it's actually very similar to Nikola. You see that spiking? There's a spiking in 2020. All the hype that was going on with everything electric, and then it sputters off to nothing, and it hasn't made any kind of recovery yet.
Okay.
But they're actually doing stuff.
Interesting.
So, who knows? Maybe the hype from Nikola will start
carry
pulling
over.
up these things. People are gonna bring these up again because this is crazy. I mean, it used to be what, $40, now it's 23 cents.
Yeah.
And that's only a few years ago. Like, there was mad money flowing into it at that point.
Interesting. Yeah.
Yeah, so I think like Nikola, like the initial, like they're doing like another round of like it to me though. I think I got targeted by an advertisement. That's how I heard about it on Facebook, and I think I believe that they just released their hydrogen electric truck, and like there's like people are really into hydrogen. So I think since they released something on Instagram, they're trying to raise their stock price, get more funding and stuff right now. So that's why I think price is going up right now, but from what I was understanding, each truck they're losing like tons of money. So I'm not.
Yeah, because you were saying they're pretty expensive at this point because they don't really probably have the volume they needed to kind of get their prices down as far as a per semi truck basis.
Yep. Yeah, they're. Yeah, so no, that's not it. But anyways, yeah, they're not profitable, and the only reason why, like, I think there's so much interest is like mainly in California is because, like, California is putting that rule in where they're not going to have diesel trucks at a certain time. Like, it's all going to be electric.
Right, because of legislation.
Yeah. But from what I'm understanding is, like, the truck is so expensive that it doesn't even offset there's no like savings from like with instead of like having a diesel truck, there's no savings there.
Right.
Because it's like double the price or something of like a diesel truck.
Right.
So long term, it's not very good. And like for it to do like go really big, like they don't have any infrastructure for the hydrogen stations. They only have 2 of them, and that's in California.
That's big. That's really big. And for truckers, you need that.
Right,
all across the country.
You can't get away without it. I mean,
yikes, I didn't even realize that because that was a big thing with Blink charging and Plug. Those 2 stocks. Those were another 2 that ran at the same time as this, and those were companies that were setting up a bunch of electric charging stations back in 2020. Just ripping them around the country.
Well, and that's why I think Tesla's just ultimately. I mean, I feel like they're just going to corner the market. With the semi trucks and really any electric vehicles. I mean, hydrogen is kind of an interesting, it's a unique play because obviously Tesla's not hydrogen, but at the same time, if they don't have the charging capabilities, or in this case, I guess fueling, I don't know.
Hydrogen. So here's their financials. It's really bad. gross profit in 2023 was minus 214 million.
Great.
And their revenue growth is minus 27%.
Awesome.
Now, if you look at Workhorse, you can see the gross profits.
Yeah,
they're starting to go up. You can see that their revenue.
Oh, so they're actually
look at that. They're doing good. Revenue growth 160%, and the stock hasn't moved.
Yeah, wow. That is it seems like that.
You know what I mean? If you look at the numbers, more interesting. If you look at the numbers, like it is a crap. This is crap.
Yeah.
There's nothing good going on here.
No, it's
this
just
is almost $1 billion.
So why is I wonder because Nikola at this point is more expensive, isn't it? Or I don't know how many shares they have, but
it's a little bit more expensive, but
which I guess it's got to be more around.
Their market cap is what we need to look at because that would actually show.
I think that's
how much money
it's $1 billion, almost or no. Yeah, I think it's like somewhere around $1 billion their market cap.
Okay.
So another one, if anyone wants to look at things, you can use stock analysis website, stockanalysis.com. And you can literally see the balance, their whole financials. See their cash flows, see their balance sheet.
Okay.
For every year.
Yeah, let's see. Yeah, these are good websites too. I'm gonna bookmark these.
Yeah, it's wild. Their operating income was minus 105 million.
Okay, so they're saying that they're getting a hydrogen fueling station in Alberta, Canada.
Nice.
That doesn't help. It's like how about we just put another one in California and just get the network a little bit tighter than just throwing all the way up in Canada. Yeah, I don't know. It seems like that it's just kind of a pipe dream.
Yeah.
You know.
I mean they could. I mean it wouldn't surprise me if because I mean they're hemorrhaging money. It may never be like super profitable, but like California doesn't really do smart things anyways. So like a lot of these people are like they're gonna try to keep on going with it just so. Well, a bunch of people lost tons of money already, so they're like they're just trying to keep it survive. Like they're not wanting to lose that money, so they're trying to keep it going as long as possible. And it's like everyone fantasizes about hydrogen. Like a lot of people are like almost cultish to like hydrogen. So that it probably will take a while before it actually dies out, but I think inevitably, I mean, you look at it.
Is Workhorse Group the same? Is that what it is?
That's the right thing. Yeah.
Okay, so they're at 73.8 million market cap is what they're saying here, and then Nikola is like a 1. I think it was 1.35 billion. Or 1.39 billion.
Yeah, so that makes this
huge difference.
You wouldn't want to invest in something with a market cap that high. It's good. Basically, the lower the market cap, the better.
Right, for growth, right, is what you're saying?
Yeah, because you have 1.39 billion already in there. That means every surge that comes in is not going to move the price as much as a surge to something that's a tenth of that. Right. So like this thing,
and they're not profitable at all.
No,
and they're not even bringing in revenue, positive.
Revenue. I think the thing that's going with them is
hype.
Is the hype, and you can't fault them for it because Tesla did the same thing for a long time until
they actually were able to gain traction.
Yeah.
But Elon Musk is a master at marketing.
He is,
and so he just keeps pushing it out. Pushing it out.
I mean, Jacob heard about this from marketing, though. Yeah.
Right. Yeah.
Like we wouldn't be looking into. Nikola. So somebody's doing the marketing. Well, you know what I mean? They're doing what they're supposed to be doing.
It's reality versus perception, and perception is all that matters.
And we can say all we want, but this could be a successful company in the future.
Right. Just like Tesla.
Potentially.
Just like Tesla.
Potentially. But I don't think that Tesla had even as close to how much they're losing per truck, though.
This seems almost like a scam because of how bad it is. But we'll see.
Yeah. Well,
it's pretty bad.
The guys in the dude who came up with it is in prison right now for so
which is a great
like, he was lying to investors, so it's just like
who's keeping this company going? Come on, guys, just it out.
It's a great founder story.
All right. Anyways, so Yeti is another one that we were looking into that I was really excited about initially. It's like from what I was seeing, it's 30% undervalued each stock.
Wow.
But here's the problem: is their earnings have gone down, and one thing I noticed is that like what companies will sometimes do when their earnings are down, they'll try to acquire, expand or acquire a different potential revenue income stream to make their stock look better. Yeah. But that typically doesn't work out very well most of the time, and that's from the Warren Buffett way. He mentioned that he's like, beware of companies that are like they may be a great company, but if they're expanding, that it may not be a good
because you got the logistical nightmare of actually bringing that other company in and making them copacetic with your core company and making sure everything flows and is good. I thought Yeti was interesting. I mean, they got just absolutely murked over this last year. I think they're at like $38 right now.
Well, it's basically for me. I mean, you see that the average person, like the overall expenses, food, gas, everything is going up in price, and it's a luxury item. I mean, they're very awesome. I love Yeti, but when you're running out of money, when the general population doesn't have a lot of money, they're not going to be spending money on stuff like Yeti. So, and then them expanding into another area instead of like they're expanding instead of like taking care of their shareholders and like focusing on their core product, and like. I mean, that would be a good move because then like your shareholders, and that would be good for the shareholders. What they're doing is potentially good in the short term, but in the long term, it's probably a bad move. Yeah. So it's not going to be. Yeah.
This is Yeti's revenue growth percentage wise.
Right. So it's
been dropping.
Yeah. And that's probably what they're trying to do.
And that's drastic dropping.
Yeah, 29 to 3.9. Yeah. Yeah, and I was
You said like you were telling me last week though, like the one good thing that they are doing, potentially good thing, is they're starting to focus more on online sales instead of in
direct to consumer.
Okay.
They're over 50% direct to consumer now instead of going through retailers, which I think is a positive thing overall, because you're kind of cutting out the middleman. Mm-hmm. You don't have to share profits with Dick's Sporting Goods or whatever. Mm-hmm. But the problem is the revenue growth is going down, and then also I was looking at the industry standard for return on capital is around 15%, and theirs is at 11%, and their earnings yield I think is around 5% right now, which I don't know.
I think
not super awesome.
It is like a product that it's an amazing product, but it's not like something you're buying a Yeti every single month.
That's another thing. I mean, you might buy ancillary things that are you might buy a Yeti tumbler, and then you might say I want a cooler, and then you might say I guess now they're doing iron pans or iron skillets.
I think that's what they're
going. They're
either they acquired something or they're expanding into something like that.
Yeah,
cast iron. But
I don't think it's a bad stock. I think it's just. I mean, I think it's also hard to sell physical products to people.
But we're like basically like the stocks that I'm interested in. Yeah. Like I'm interested in trying to find stocks like Warren Buffett does, and like those are the stocks that over 10 years they're up like 1,000% or 10,000% or something.
Right.
And
in light of that, actually, that was the other thing that we saw is that the original founders are really not involved really as much at all anymore, and that's not a great sign. Now the CEO I think has something like 60 million in stock, so that's good, but we'd have to do more analysis on the board to really see if the incentives are aligned properly or not. But
yeah, for me, after going through it all, like that, it's kind of like that's a potential one maybe in the future. Mm-hmm. If things change, like watch it, but I'm not interested in per me unless it let's say it goes we get a massive recession and goes down to like $5 or something,
right,
a share,
right,
yeah,
but yeah, it's interesting. I mean, I do like the moat because I think they have a pretty good brand moat because I don't if you think about like high quality premium coolers or tumblers, I think of Yeti. I don't really think of.
So what are you looking for with the Warren Buffett method? How do you start screening from the big picture? Like where does that all start from?
Well, it's basically like he has 12 tenets of business. So like he's looking at I don't remember all of them off the top of my head, but he's looking at the executive board to be candid with the investors. So having this really good honesty back and forth. He's looking for basically a lot of integrity in the board, and then there's other metrics. I mean, you have
that's specifics, but how do you even get to finding
how do you screen for it?
Because there's so much to go through. How does he eyeball things from a distance?
Right. How does he get down?
Is he looking at historic 20 year? Is he looking at actual revenues going up?
So basically, what he's doing, he'll look at a bunch of different he's always doing researching, finding good companies. He may find a good company, but it's the wrong time to buy. The price is not at a good price. So he waited with a couple companies if something bad happened or whatever, and the stock price went down, but its earnings are still good. Everything's good looking for long term. He's planning on. When he invests, it's businesses that are going to be around for a long time, 5-10 years. Right. And then earnings, unique product, good leadership in the company,
brand moat or something that makes it differentiates it. Yeah, I mean there's
unique. Yeah,
we haven't really drilled down on it as much as probably we should. But there is one thing that I was kind of struggling with the same thing, which is okay, there's all these tenants, but how do you actually screen for specific stocks? How do you narrow
certain industries that are preferred for this type of trading?
Well, for Warren Buffett, he does dabble a little bit in technology stocks, but he pretty much exclusively stays away from
rarely.
So he stays away from emergent
new technology. Yeah,
okay.
Like he wasn't in Amazon, he wasn't
Right.
in all these, Microsoft. He wasn't on that bandwagon.
He goes for stuff that he's familiar with, like in his niche area. So it doesn't mean that technology stocks are bad. He's just basically he's like, I don't understand.
Yeah,
them.
he doesn't. He doesn't understand that. That could
No,
be,
he doesn't.
I've seen a lot about him just not getting it.
Yeah.
He just doesn't get crypto. He doesn't bash it. He's
No.
just like, I don't.
Yeah.
Like I'm trading commodities, guys.
Right.
Well,
I'm 90 something years old.
Right.
he doesn't actually do commodities.
He lives in real life though.
Typically.
No, he doesn't. Although he did, I think in like somewhere in the
textiles.
90s or the late 80s, he did a huge trade with silver.
Mm-hmm.
But other than that, like I think he looks at like
everyone's gotten their training from if they're in the stock market. Seriously, they've done both.
A little bit of commodities. Yeah. Well, he did. If you ever hear him talk about gold, it's funny because he's like, if you get gold, he's like, you can look at it, you can coo at it. He's like, it's not going to do anything for you. I'd rather own, farmland or something.
He was a
like
commodity. He was into commodities before stocks because he collected Coke bottle caps before he invested in Coke.
I didn't know that. Yeah, hell yeah. Yeah.
That's what got him into it.
Yeah.
He just really liked Coca-Cola.
Yeah.
Well, he's definitely, balls deep in Coca-Cola.
Started opening his own vending machines or something like that.
Yeah.
I don't know. I didn't read the book.
I did recently. I was looking at that. I'll mention it briefly because I think it does help. I kind of want to layer on this kind of methodology with Warren Buffett's, which is like Joel Greenblatt. I listened to his book recently, which is like the little book that still beats the market. And he primarily, what he does is he looks on basically earnings yield and return on capital, and then he ranks all the stocks in the stock market, and he basically ranks them according to those two metrics, and then he puts them together. So it's not always just the best earnings yield or always the best return on capital,
right?
But it's the combination thereof. And then he'll buy it, and then after 1 year, he sells it, and then he does it again, and he just keeps doing that. And he's saying that those are two metrics are, he believes, the most important metrics to look at as far as longer term investing. And I was thinking about using that and then trying to layer on Warren Buffett's tenets, because the tenets I feel like are kind of like a general methodology of looking at a company and trying to get like intrinsic value versus the price.
Right. So
you're going deep into
which you can't. It's not correlated at all.
Right.
Especially not nowadays.
No, and that's another thing is like Warren Buffett takes a lot of his methodology from Benjamin Graham, and Benjamin Graham's methodology was basically like, at one point he basically said, I'm not going to buy any stocks that I can't just take all their assets and liquidate them and get like, basically if you take all the assets and liquidate them and that is equal to the stock price, then he might be comfortable with it, but really he wants a margin of safety and wants a little bit below,
right.
Which doesn't work at all today, because everything is way more inflated.
Yeah.
So.
Yeah.
But it's interesting. I mean, what's your kind of you do a little bit more like a lot of more short term, or do you do long term?
Medium term,
short and medium.
Swing trading kind of. Okay.
I can't say long because I've never held anything long enough to say that.
Fair enough. Which would be like long term would be like over a year, essentially, or how are you defining that?
I've held things for a year,
but not multiple years.
Not multiple years.
Fair
multiple years would be long term to me.
Yeah.
Because I've had call positions that I've held for over 8 months before.
Okay.
And that's not even stock position.
Okay.
So like I don't mind. I have patience.
Right.
I have patience for a position, but I have patience because the way I trade is finding a fundamental reason why in the short term it should run. Does that make sense?
Right. So short term, within the next year or so,
yes,
you're looking
because
at some
I think you
fundamental...
can kind of usually you have enough insight to know what's going to happen with the company in the next year.
Right.
And they tell you when certain things are going to be happening. And in the stock market, things typically tend to run towards events, sell off after the event happens, go on a dull period until the next big news happens for the company. Then it'll run up again. Everyone will get excited. The news will come out that's exciting or not, good or bad, and then it'll tank again. So
kind of like buy the rumor, sell the news kind of type of...
Yeah.
Is that... Yeah. Yeah, because everybody gets pretty... Like, it's like... I'm putting out a Cybertruck. buy. Okay, now you probably want to hold that for a while and then sell because it's not going to actually happen, or it may happen, but it's just going to fall after that.
Yeah.
Potentially.
Which
is like probabilities, right?
Yeah.
Yeah. Interesting.
But if you ride the wave, you don't need to ride it. You can get off whenever you want.
Right. So how comfortable do you feel like?
Yeah.
With the
I think the biggest things for if you're doing shorter term is having like a minimum loss or a maximum loss. Having a maximum loss acceptable.
Yeah.
Across the board for everything and be able to stick to it.
Right. Be disciplined with it.
Yeah.
Not emotional.
Yeah.
Not be like, no, it's gonna turn around, bro. It's gonna turn around anytime now.
And I think it's okay to get excited when it starts ripping really high because it's not like you can not get excited. What are you gonna do? Like self-talk yourself into being depressed because you're in profit. Like,
right. And you gotta keep an eye on it. It's okay,
but like but also be like once you see you're up like 500%, you start seeing it fall.
Right.
Take your 500%.
As soon as you start jumping for joy, maybe you should think about selling.
Because it could turn into a 100% move, and then you can sell it, which is fine. You made your profit, but
don't get greedy.
Don't get greedy.
Yeah, that's the thing. Like, what I did before, like, I'd see all these charting, like, I'd be part of these groups, and then they're charting, and like, it could go up this price, and everyone's getting like super excited, and you don't sell, and it, like, at least cash in a little bit. Like that's kind of what my strategy has been now is like, just if it goes up, just take like a little bit, a little bit off. Even if you
make 25%, take 10 off the table,
right?
Like something like that.
Yeah. Offset.
That's solid.
Risk.
And then by the end, let's say it's still running hard, and you only have some of your money in, that's okay. You're making some money on that money.
You're still making some of it.
Yeah.
So,
and if it goes down, you're like, okay, you're going to be very relieved because you did that.
Yeah, exactly.
It's very relieving to be like, wow, I secured profits all the way up.
Yeah.
I can chill with this one little position and see what happens.
Right.
But I mean, that's kind of what I've been doing with Doge is like I secured a little bit of profits the other day, and then today I secured a little bit more because I saw it went up to 21 cents, I believe, and then now it's down to 20, and I'm like, I've seen this where it could go back down to 15 cents, so I'm gonna take a little bit more out, and like if it goes back up, I still have some in there, whatever, but if it goes down, then I may just take that money that I pulled profits, now I put it back in, and I've got more Doge shares.
Fair. So I know you don't use statistical analysis at all. I mean, you've played around with it a little bit.
I've seen a lot of people try to predict what the market's going to do with a lot of charting and stuff, and it just has never really worked for me.
Fair.
I've seen where it has worked here and there, but it's like there's a delay from someone else who actually understands what's going on, doing the charting, kind of understands, because it's never going to be accurate 100%. It's theoretical, because the market is very emotional and it doesn't make mathematical sense. It's not an efficient market. That's a false narrative that is taught in colleges, in a lot of finance. They think the market is efficient. It's not efficient. It's very, very emotional.
Well, I mean, if you look at Nicola, I mean, I don't think it's efficient.
No.
There's some definite hype there.
There's been a separation, and it's been happening the past few years, like a major separation in reality.
Yeah.
So, and Warren Buffett lives in reality.
Right. That's his mainstay.
That's where he lives.
Yeah. He plays bridge and he stays in reality.
And when you're talking about Doge and you're talking about short-term stuff, the reason why that stuff is good is because of volume. That's the single reason why.
Right.
Volume. People are there.
Right.
You don't want to be like in short-term places where people aren't. That's why you get stuck.
You want to high amount of
It's like the exact opposite strategy as long-term at the end of the day.
Right.
Yeah.
So you don't want high volume with those long-term ones. You want people who trust the stock. Because I think high volume is like having a workplace where there's constantly new people. Yeah.
Right.
It's never good, right?
High turnover.
High turnover is never good.
Right.
Like, it's only good if you're trying to make a lot of money or trying to lose a lot of money.
Right. So do you use statistical analysis, or do you use it to like maybe do an entry? I mean, you said you're using some fundamentals to kind of base, reasonable like 6-12 months out.
I'm usually looking for emergent industries.
Okay.
So
new technology,
I like crypto, I like
that.
AI, like all these speculation. Yep.
Yeah.
Lots of speculative things. Then I start looking at like what are the biggest stocks in it, right? Mm-hmm. So for AI, it's C3 AI. That's the biggest one. The market cap's huge. Mm-hmm. I can't make a bunch of money on the options because the stock's barely. It's such a big market cap. It's not going to have big 20% moves very often. Yes. Yeah. But there's Big Bear AI and some other ones that are $1, $2 stocks, short or very small market caps, and those are the ones that I usually look into to either buy the stock or call options, and make sure they haven't gone make sure I'm not buying the top on it.
Right.
But
yeah, you're getting in. Yeah, you don't want to get into it when there's a frenzy and then it's about ready to putter out.
Yeah.
Yeah. That seems like that's
so
hard.
I'm usually looking at volume. I don't look at revenue at all. I don't care about that for anything short term.
Oh, great.
Like it doesn't
matter.
You
just care about
nobody
attention.
in the short term cares.
Yeah. Right.
Like there's literally it's all idiots. Like
right.
Yeah.
Yeah.
So that's why like the Warren Buffett method of deep diving.
Yeah.
Is like you're looking for diamonds that no one else is looking for.
Yeah. Right. You're looking at diamonds in the rough that you can hold for 30 years.
Because everything else is easy cash grab, you could say.
Right.
And so like I do think the deep dive way is definitely the way to go long term because if you could find a few of the things that are checking the boxes.
But at the same time, you actually have to have capital to be able to actually throw into that
But you just add on like I'm interested in ones that are like pay dividends and like if I find a good one like I'm gonna like I can put a percentage of my income in that for a couple years or so, and if it's at a good buying price, like you can, I mean there's huge potential there, and as long as you don't need the money and you wait 5 to 10 years, you got your fundamentals. You use his strategy. If you even if there's a bad market, you just don't be afraid. Like my stock is down right now, but I got in at a decent buying price, and you can use also the method of like just like doubling down on your investment to get your cost dollar average. Yeah. As long as everything's good with that company, your belief is like not belief. It's like
you've just ran the numbers.
Yeah. I agree. I think long-term holders get a benefit from dollar cost averaging that people don't understand.
Yeah,
because they're not losing anything.
Yeah, and
so when you have a COVID crash in March of 2020, you're holding your Coca-Cola. It drops 30% in a day. You're just like, wow. Guess what? For the past year, like I have a bunch of money that is just sitting here that I've been waiting. Right. Like you've been waiting for this moment. 30% down, you inject your cash.
Yeah.
You inject that, and then it goes back up because it does. And now it's over what it ever was.
Yeah. There is a Ben Shapiro. I don't know. You probably know who Ben Shapiro is, right? He spoke about how he invests, and he basically says, index funds, but he says, during regular times, I dollar cost average, and then when this market's down, I double whatever I put in. And I'm like, oh, that's solid.
Like
that's solid.
That's actually thinking.
Yeah. Because it's like using that dollar cost averaging principle, and then just like
because if you put thought into it, like it's a job. Probably not even that much, to be honest. But you put some thought into it, like this stuff will build for you.
It's all emotional intelligence. Like the thing is with like I mean my own experience is I'm like I want to make money quick and like you're doing these trades and stuff and you end up losing tons of money. If like the time will pass regardless. So if you can put yourself in an emotionally stable state and just be like, okay, I've got like you just invest over time, like you'll do way better off. I mean, if I just held and didn't trade, I mean.
You'd be like,
because I pick good stuff. I pick good stuff.
Yeah.
And, like I would literally be a millionaire right now.
Yeah. My mom picked Kirkland, bro.
Oh, really? Way earlier?
Like 10x.
Damn.
She was like, wow, I should get Kirkland. It's like beginning of COVID because I was talking about her stocks. Neither of us ever bought any. And then we look at it, we're like, oh wow, better than crypto.
It's just like it's so much fun too when you cost dollar average in, and then you get like then stuff starts pumping, and you got in a while ago, and now your profit margins are up 100%, 200%, and you can you're like, even if it's a stock that I mean, I think Warren Buffett just holds unless like it's just way overpriced. He's like, this is way overpriced, so I'm gonna cash in on some of it.
Warren Buffett does sell. He doesn't.
He does
just hold.
He does. I think he actually sold a little bit of Coca-Cola not too long ago.
He
just
gets rid of portions.
Portions,
and then
when it's really high, and then when it goes
it
low again, he just probably puts it right back in, or puts it somewhere else.
So we're buying calls on Berkshire Hathaway.
Right. I mean,
we should have. We should have Warren Buffett.
The book I just listed, or Charlie's Almanac. He's like, Berkshire is overpriced. He's like, it potentially could be like keep on going up 15% or whatever. But he's like, I'm not saying it's gonna do that.
I love that. I love that when like the actual like CEOs or whatever say, oh yeah, our stock is overpriced. And then like that's a baller move.
And then like Elon Musk says that, and it's true, Tesla. But people are like, he's trying to trick us, and then they just buy more.
They did bump him in.
And it's like
that was the best thing.
He's like trying to be honest and kosher with everybody, and everybody's like reverse psychology. Bye.
Yeah. Which I mean, it's over. Like it. I was just looking at it. People are like, "Oh, Tesla price is overpriced." It's still overpriced by 30%.
Oh man!
And people are thinking it's low. So it's like, I don't know if like you'll really ever get a great opportunity to buy Tesla at the valuation that it's at, unless
at fair value at this point.
Yeah.
Like, everyone would really have to really not like it anymore, but.
Or if we get a nice like economic recession going on, and you got some good cash on hand.
Yeah, but then is it still going to be overpriced relative to other companies that you could pick up for a bargain?
Probably.
Probably.
It will suffer last. Yeah. That is true.
Yeah.
But I mean, the thing about Tesla though is, like, they haven't even gotten into a percentage of the trucking industry yet.
I didn't even know they made trucks, to be honest.
The Teslas, dude.
They delivered some to PepsiCo.
Huh.
That once they start hitting critical mass, like, and let's say, I mean, just 500-mile range. We're both truck drivers. Or I haven't driven 500 miles in a day yet.
I have.
Well, you're over the road.
Yeah.
I'm doing but for local, I don't think you'll be able to compete profit wise unless you do go test. I could be wrong. I know, like, it's still emerging. Huh?
Well, sorry, I was kind of blanking for a second. What were you saying?
So, like, the semi truck, I have from the profits or the money that you're saving in diesel fuel with the Tesla semi truck I think is going to be massive, and I think that the profit margins are going to be so much more because of the Tesla semi truck that like companies are just going to start going in waves towards it. If the savings are there, I think potentially once they have the proof of concept, once the trucks are going and like people are like they're actually using them and they do the financials. If the financials are what I'm thinking, which they're going to save like 50% or possibly more in diesel fuel, which is massive. Yeah, it's like $100,000 a year in diesel fuel from what I'm pretty sure that's like at least over the road, because that's
oh, I'm sure. I mean, I spend whatever $300-400
actually I think it's 80,000 60 to 80,000 range.
I mean, I guess it just depends on how expensive electricity is at that point in time. And how many charging stations there are. I mean, if anything, that's what I'm saying. I think Tesla's going to crush everybody else, because it's not that hard to convert a charging station for cars to just adding a few for semis. Yeah. Or you just actually make it to where it's accessible to semis as well. I don't know.
Well, you just charge them at the lot. You just have plug-in stations at the lot where if it regional, because you're not going to really see over the road until later.
You would have to, though. I mean, you couldn't just charge at the terminal.
If it's a local trucking company.
If it's a local, if you're just doing local deliveries. But I'm saying, like, what I do as far as over the road, I have to be able to have charging stations along the way. If I'm going from, Wisconsin all the way over to Pennsylvania, there has to be something en route that I can access.
But you're not going to be, the companies aren't going to be buying it for over the road at first, I don't think.
Fair, but I'm just saying, at some point, that's going to have to be a reality. And I don't think that's too hard, because Tesla already has a crap ton of charging stations. I mean, definitely compared to Nikola.
Yeah.
Which has two.
Look into Workhorse maybe this week a little bit.
Yeah.
See what's up with it, because I think it's like a better. It has more going for it than Nikola, that's for sure.
Yeah.
Yeah.
All of these, like you said, can really get teabagged by Tesla at the end of the day, but.
Right, but short term, it's
short term, but at the same time, I think they could share the market
share. Yeah.
I mean, it's possible. It depends how strong they are.
You're right.
But they
and what are they doing different?
Right. Right. Well, and the hydrogen, I don't really understand that much about that technology, but that is different, obviously, than Tesla. Is Workhorse? That's not hydrogen. That's just pure electric, right? I think.
Workhorse?
Yeah.
So it's really all about the production. Like once that factory starts pumping out semis, that's when the value is gonna really kick in. Like production.
So Workhorse is a technology company focused on providing drone integrated electric vehicles to the last mile delivery sector. As an American original equipment manufacturer, design and build high performance
battery electric vehicles. Okay, so it's not really hydrogen.
No.
Like Nikola.
No, it's not like no. I'm not quite sure what they're talking about though. What in the world
so like
does?
What would you? So if you're if you're looking at more short term, like what would you be looking at some fundamentals? You're just looking for any.
Okay, so short term, I would definitely look at volume, which is not very good for Workhorse. But if we go to here, we'll type in.
Lenovo, no.
I think I only brought half my computer charger. That's why.
Oh, bum.
Can't find the other half.
Maybe I'll look it up here. Stock Viz was where you're.
I can use my phone though, because that's what I usually actually use for everything. So.
Okay.
I'll be right back.
Okay. Fair. Yeah.
Oh yeah, Robinhood has volume.
Okay.
Yeah.
Let's see, screener. I'm gonna look up Workhorse group. Here we go.
I think that's.
So this would be. Yeah, go ahead. Sorry.
Yeah, it's really gonna come down to like how many they're actually gonna be able to produce. If they can get because like the hardest part about these producing vehicles is the factories, like building the factories and having it seamless.
Right.
And like I think that short term you can have a lot of hype with these other companies, but Tesla's already established and it can go through all the kinks and handle things that can go wrong.
Right. Well, they already have already have their manufacturing base up and running. Of course, it's not tailored to semis, but they do have a portion tailored to semis. But that's I guess that's over the long run. So over the short term, I guess like he's talking about buying. He's talking about volume, trading volume, which it looks like Workhorse regular average volume is 9.07. So million. Let's see. So it says average volume is 9.07 million for Workhorse.
That's good.
Is that?
Yeah.
Okay.
So there's stocks that'll trade at like 50K in a day.
And then you're like, eesh, am I
like
gonna get caught?
Pharmaceutical ones. Yeah, you'll see them. They're like bars like this.
Right. Yeah, and that's why you'll buy it and then you can't exit.
So Workhorse looks like actually it took a jump, maybe around when Nikola was, and then it's put it out again.
Okay.
But that's just, and then the market cap 71 million, average volume's 12 million.
Yeah. Okay. That's probably over a certain time frame relative to what. I don't know if this is yearly. I guess maybe. Yeah. I don't know.
Another good one on if you go on Hormetic, is daily percent change.
Okay.
So you can see everything that's moved, like up or down.
Right, the biggest movers.
Biggest movers as a big one.
Yeah, the 9.07 million, that was the average over the last 3 months, it looks like.
But really, when I look at it, it doesn't look like, on the charts, it's not promising at all.
Oh, okay.
Because it's just down, down, down.
Right.
And then it went up, now it's down, down, even lower than before. So it's like, that's where I see charting as being useful. I mean, unless it bounces here, it doesn't really.
So you're looking for.
I'm looking for a reversal.
Volatility,
this could be a reversal, right? It could have been a reversal. That was a very nice candlestick.
Right.
But it's not making it past anything.
Right. Yeah.
And it's not really making it past here, and then it's puttering out.
Because technical analysis is basically like you're looking for a rise in candlesticks, and then you're looking at.
I mean, right here, these are all whale selling.
Right.
These are people buying, whale selling, people buying.
Right, and this is resistance here, so it went up to resistance, which was the lower low, I guess, and then you come back up, and then it. Yeah.
Go to the weekly real quick.
Weekly up here.
So we could see more. Okay, go to monthly. Interesting. Huh.
Yeah.
So when something has happened like this before, it could happen again, but also.
Right, how it just fucking shot up.
But also the thing is,
months.
Getting in over here, right here, for that short-term run is what I'm trying to do.
Right, so you're looking at something like this, and you're looking at
I'm trying to look for something like this.
Right.
And then trying to ride this.
And trying to figure out if this is getting enough attention and trading volume.
Yeah, see this original stick, this original green stick right here?
Yeah.
That's insane hype.
Right.
If you bought right here, you're still, over doubling your money?
Right.
Which, in a long-term situation, would take very long.
Right. Yeah. So, but then the thing is how are you guessing?
And this is also bad long-term stock because you could have bought it here, right?
And you're right back
made
there.
Nothing.
Right. Yeah.
So it'd be something that you'd keep up with and be like, you'd obviously sell.
Right.
Once it's gone from a penny stock to $50.
So if you're looking at just this, right? If we're at this point, then you're looking at trading volume still a little bit, and because you don't want to get stuck in the stock.
This volume would have pointed me in this direction.
Right.
Immediately. These are all volume spikes. These
they
little
keep
ones
going
here.
up.
Once you originally see this, it'll start popping up on the news. It'll start popping up where all of us start seeing it. And then that's where you decide if it's going to happen like this. Like this was obviously hype up, and then it interestingly fell here. Then you have similar pattern here, and it goes up. And that's why Jacob says it really is like, you can't just say it's a flag pattern, it's going to go up.
Right.
Like that's a flag pattern that broke down.
Right. Are you, before you get into a position, are you picking exactly when you exit, or you're just feeling it out as it goes along? Like if you're looking at it, you're like, okay, I want to get in. I'm gonna sell at this point. You already pre-decided that.
Yes, somewhat. Yeah. Because with options, I have an idea of where I need to sell it. Right. Because if you hold
theta decay,
it's gonna kill you. So once I get within like 3 weeks, you'll start eating it.
Right. Yeah.
Especially because I get stuff like around 25% out of the money. So those are a little bit riskier. Yeah. So once I'm about 3 weeks out, I need to usually figure out how to sell that. Right. Yeah. Profit or not.
Yeah. Because I messed around just a little bit with options, and I was like, I didn't know anything at all. Shit from Shinola. I bought an option, and I was like, I'm getting screwed. Theta decay is killing me.
Yeah, that'll happen. It took a long time. I'm still learning. and then it's almost impossible to teach. It's really hard to teach it.
Yeah. Light Vantage. That's the one that like honestly I wanna. That's where I'm gonna be adding.
So looks like they're making a solid reversal actually.
I think they're looking great right now.
If you look out for the 5 year, we have downtrend. Like we shouldn't be buying. Looks like that. Like it's not. Nothing's going on here. This original right here, I still wouldn't buy. You know what I mean?
Right. Because
you don't know what's going on. You don't know. Yeah. Once you see this though, this is looking good.
Do you know what was happening there? There was a group trying to do a hostile takeover of the company for years, and they failed. And what the company's been doing is they've done really well profitability wise. They're overall profitable company. They've got a solid consumer base or customer base, and they just put in dividend. Like they're caring about their shareholders. So and like now that is the hostile takeover failed, from my understanding, like all that failed. Now it's got potential to start getting back to what it was before. So, but yeah, I think that's a great one. I'm personally going to be adding to my position on that over time.
Nice. Yeah, seems solid from what you're saying.
Yeah, and
anything that has returning customers that.
Yeah, like a subscription model type of deal.
And they have like a cult following, pretty much.
There you go. As long as the cult doesn't fall apart.
Yeah. But they also have.
But the dividends is very nice. That's very nice. You're going to be getting cash holding it.
Yep.
Like, underrated.
It's still not like I don't know if Warren Buffett would necessarily invest in that because the market cap isn't as high, like ideal enough, because that doesn't have a good enough moat that he would feel secure. But the fact that they beat this, I mean, this has been going on for years. Now that they've gotten out of that, hopefully things will start looking good for it in the next couple of years.
So I have a question.
Yep.
So Warren Buffett's method, it goes with his philosophy, right?
Yeah.
So can you use his method outside of his philosophy on emerging markets? Do you think that's okay? Or do you think it's really only for, what's the word I'm looking for?
You could do the reverse approach like you were talking. I'll use Warren Buffett's method to find the worst companies and then short them.
Yes. I'm just wondering if, because I haven't read enough about it, like can we use it on emerging markets? Because he's not.
He's not in that. Yeah.
Yeah,
like, I don't think would that method work?
No,
I think it would work. I just don't think. I just
tech
think
is becoming old somewhat.
I just think it's risk. It's just gonna your risk is higher.
Looks.
It's the same, but your risk is higher, right? Because
he looks at companies that have been around for a bit.
Yes.
That have consistent profitability.
Right. So
have good management. Like he's got. And it's. I mean, yeah, good management, good unique product. And he's looking at, is this company going to be around in 10 years from now? That's it. Like, if
so
it's not going to be...
anything we're talking about with EV or anything like that is off the table for that.
Pretty much.
It's all new.
But, well, it's off the table for him, but okay, for instance, Bitcoin for me. Bitcoin wouldn't fit necessarily some of his parameters, but one parameter that it would fit for me is because I'm familiar with it. I've known about it for a long time. So invest in things that you're familiar with. That's one of his key things. So just because he wouldn't invest in it doesn't mean it's not a good thing for you. And they're like Bitcoin, for instance. There's just parts that in his methodology that just don't exist in it, like management. There's no management with Bitcoin.
It would work for other cryptos, though.
Yeah.
That most of them are centralized.
Yep.
I just think when you go into the tech sector, you can do the same thing with Warren Buffett's methodology. It's just that you're adding in the risk that he's subtracting out.
I mean, maybe the best thing to do is just look at what they're buying, and see if there's anything that you're interested in.
Warren Buffett they rarely buy anything. And they try to keep it down low if they do.
Well, it's on Berkshire Hathaway's website.
What's interesting to me is like Warren Buffett has so much money and so much influence when he chooses to buy a stock. Is he inflating the price to where it's not worth it to even invest after the fact?
That's why he doesn't mention it.
You know what I'm saying? Because he holds so much pull. And so it's like if he says, if he said Nikola is a good stock, you bet that shit's gonna just fucking rip with
Yeah, that's why he makes these incognito moves.
Yeah.
Right.
Coca-Cola, someone figured out he was buying into Coca-Cola, and he called him, would you happen to be buying this? He's like, as a matter of fact, I am, but please don't mention this to anyone.
Right.
Because otherwise the good buying is going to be gone.
Right.
So.
Yeah. And that's why they have to, like, the bigger whales usually have to buy in segments or tranches.
Yep.
You know, instead of just going in and just, or sell. Same thing with sell.
Yep.
But I just think it'd just be adding in the risk.
Mm-hmm.
Adding in the risk that he is subtracting out. He's saying, hey, I don't want to deal with technology. I don't want to deal with emerging markets as much because they are risky. And I'm not looking at companies that don't have a consistent track record or a long-term history. So he's taking out that risk because he is planning on buying and holding for
a long that's been around for a bit.
Yeah. Which did you hear about Apple losing a lot of its market share in China?
Oh, really?
Yeah.
To what?
I heard
Yahweh
something
or
about
whatever?
it
because of manufacturing.
Well, I think because I think China's doing something to try to not like get the Chinese people to buy phones from China, not from the United States, something along those lines. And it's like a big deal, like for Tim Cook. And that was a couple weeks ago. My details aren't fresh in my mind, but
yeah. Well, I know. What is it? Huawei or Yahweh or Huawei? No, it's Huawei. That's one of the biggest Chinese phone manufacturers and I think service providers too.
Yeah.
I'm not sure, but I know that was in the news a while ago. People wanted to ban. I think it might be banned in America. I'm not sure, but
yep.
That looks beautiful on the charts, to be honest. This is his petroleum. One of his petroleum holdings. Let's see what the max is. Oh, what happened? Oh, yeah.
Pipeline issues?
No, that was the COVID where was it the price per oil
just
went negative or something?
That was weird.
No one's driving.
I remember about and they had
it was wild. Imagine buying. That would have been the perfect time to buy.
I knew it was the good time to buy. I knew it was. I was like, this is insane.
This is why you gotta pay attention.
But I wanted to do 1 to 2 month moves. That's the problem. So I was playing this zone right here. I should have just bought here and then.
That's why the short game sucks.
Yeah.
In a lot of ways.
I think the short game is fun though.
With a small percentage of money. Yeah, that's fun. But long term,
this looks beautiful because we have a baseline
it's trading sideways essentially.
And but it looks like it's triangling on an uptrend.
Okay.
My guess is this keeps going up. But
yeah,
nice.
It is oil, so yeah.
You never know.
It should be going up for a while. I don't see any reason why it wouldn't.
My overall hunch with the whole climate change thing, because like a lot of that is having an effect on the way that the government is imposing like go green stuff. I think that potentially it's been backfiring so hard in like Germany and other countries that have been like, I think Germany, they stopped they were going all like trying to go green or whatever, and then the Russia-Ukraine thing happened, and then oil prices went high, and their green energy wasn't able to produce, and they ended up having to use coal and stuff. So it was like a net negative.
Right.
So hopefully we learn from this, and like, yeah, I'm all for like good energy, but the go green thing is like, it's a scam in a sense. Like it really doesn't have a net positive. It doesn't meet our needs. Like
I think it's good. It's just that you don't want to force it.
Yeah.
So you should let the market kind of delve that out or parse that out, because
you can't be punishing
farmers.
Right. Yeah.
That's what's really messed up. But to say like you don't want to have solar panels or wind energy or whatever, you can argue about like how feasible that is. But I think net it's positive. It's just that you don't want to go and mandate things because it turns out the government's not really rational when it comes to that kind of stuff.
Yeah. I don't know.
It's like, hey, I want you to jump 10 feet. I want you to do it now. It's too much of a jump.
Like California by like 2030, no more diesel trucks and stuff.
Right. They can subsidize. I'm okay with subsidizing to an extent. If you're subsidizing green energy, I'm okay with that. Because the governments do this all the time. They subsidize for things they want. That's fine. But when you mandate you can't use this anymore, that's when I think you have problems.
Yep.
Yeah.
Yeah.
But Interesting.
Do you have any more stocks thinking about, or?
Well, I'll see what else was on his website.
Yeah, let's do it.
On Berkshire. See what else he's investing in. That seems like a really good long term an oil, at least an oil in your portfolio.
Yeah.
Seems like a solid way. Especially if you're gonna put anything EV, then you can think of it as a hedge, because it is a hedge for you.
Right. Yeah. You could have both.
They're very inverse of each other. Yeah.
Yeah. True.
Like when those all dropped, that oil I just looked at.
Yeah.
Like that was the time when the EV started ripping, because everyone's like, "What is going on?"
Right.
Like they were confused on what's going on.
Right. They're thinking, well, yeah.
Everyone knew it was gonna slingshot back,
and
now it did.
Yeah. Yeah. That's interesting. Let's see. I'm gonna just run through, just mention this real quick, because these are the 12 tenets, Warren Buffett tenets here. So, simple and understandable business, consistent operating history, favorable long-term prospects, franchise business. So he's basically not looking at commodity businesses. So at least right now in his career, so it says here, on the other hand, commodity businesses generally offer low returns and are prime candidates for profit trouble. And that's probably because commodities don't really change a lot in price, and there's a lot of competition already in the marketplace. Then he's looking at a management that's rational, candor, so he's looking at a business that the management is open with the shareholders and not looking like it's trying to hide things or be over optimistic. Resist institutional imperative. So he wants managers where their interests, probably all their pay package is incentivized and aligned exactly with shareholders.
He lives in real life, as in he's like being an angel investor to every single one of these stocks.
Yeah.
Yeah.
He treats every single company like it's his own company.
Yeah.
He's like, if you have your own company, whenever you're investing, treat it like it's yours.
They always show this as the thing to look at.
Yeah, they're always talking about that.
Return on equity.
Yeah. Yep. So yeah, he's looking at return on equity, not earnings per share, owner's earnings, and high profit margins.
So he's looking at how much. Wait, can you go up?
Yeah.
I'm kind of confused on what this is.
All marketable securities should be valued at cost, not at market value. Exclude all capital gains, losses, and extraordinary items which may affect.
Interesting.
Ensure there's little or no significant debt, because companies can take on debt to increase their return on equity.
Yep.
Which is what we were talking about with Yeti.
Manipulating the numbers.
Yep.
Right.
For if that's what you're looking for.
Right. So Yeti just recently went out and acquired more companies, so they're taking on debt to do those purchases.
So that's why we wrote off. That's why I'm writing off Yeti.
Yeah.
Because that's the trick they're trying to do. They're corporate.
Which is similar, if you think about it, to like personal finance. If you see, I mentioned this earlier, but like not in this podcast, but a previous podcast. But if you see that guy with a nice boat, nice truck, nice house, you're like, dude, he's fucking balling. And then turns out he's just leveraged all the way up.
Yeah.
Right.
Yeah. Usually.
Let's see. And then high profit margins. So he like owns all of C's chocolate candies, and they have really high profit margin because their brand is so strong that they're allowed to price their chocolates way above the rest of the market. $1 test. This one's interesting. For every dollar retained in the company, does it translate to at least $1 in market value? This tells you if the company is able to invest capital at an optimal rate. So that's interesting to me.
Well, this is helpful for opening your own business.
Kind of, yeah, right?
Solid business advice here.
Right, yeah. What is the value of the business? Purchase it at a significant discount to its value. So, I mean, that's buy low, sell high type of things, Margin of safety.
Huh. Yeah. I like that.
And this is the thing, is like I want to find companies that fit the criteria, even if they're overpriced, and just have them on the back burner that you can watch them over a couple years, and then if there's like a recession or something, that's when you've got your nice little chunk of change and you buy in.
Yeah, and I think he has like
perfect. This chart is
just margin of safety.
If you can somewhat track what this blue line is, then you will know the dollar cost average right there, and you will know to sell some right there.
Right. So this is Ben Shapiro doubles his investment. Or if you're short-term trading,
So that's what it means in reality. He's finding exactly what this blue line is. That's what this is all about. Finding what this intrinsic value is. Yeah. That's all you need.
Yeah. Price relative to actual value.
Because people aren't really. They're looking at without the blue line. Yep. So it's very confusing without it.
Right. That's what we need to do. Is just find companies and then take that blue line. And it's like it's a cheat sheet.
I'm down for deep diving on some companies that we want long term.
Yeah.
Because I want to open my own Roth IRA.
Yeah.
That I'm not going to touch.
LifeVantage is one. Bitcoin and Tesla. If I can get one at a decent price.
Do you have any thoughts on since we're doing Roth IRA or stock market like the Bitcoin ETF? Any thoughts on that? Or would you rather just be a Bitcoin holder because you actually like Bitcoin?
I'd rather just.
I'd rather hold Bitcoin.
But I think it's good for the space.
I think the ETF will be around.
Yeah, I think it'll be. Yeah, for sure.
And if it always follows Bitcoin,
it depends on if you're actually trying to hold what the reasons, your intentions behind holding Bitcoin. I think
holding it in your Roth IRA would be categorizing it as a stock only, like an index fund that's following a commodity type of thing. Like they have it for
and you don't have to worry about taxes or anything like that when you do so. Or you hold Bitcoin for real and then you just move to another country. No, I don't know.
Doesn't work. The government will tax you if you become a millionaire and revoke your citizenship and try to leave the United States. They'll still.
No, I'm just saying that if you move, it doesn't really matter at that point. Because you just transfer your Bitcoin, you move, they don't know.
So I think everything he has on here is like pretty solid.
Unfortunately.
He has very, these are all very big, solid companies.
Right.
Yep.
So if you wanted to not just look at what he's doing, we could go one step lower. It's like, look, these are all in the $1 billion market caps. Right. So let's do the Warren Buffett method.
But like
something
a 50 million.
Something with under $1 billion market cap, because it'll be better for us. We're young men.
Yeah.
He's been in these companies for a minute. He's been in a lot of these.
Yeah. Yeah, basically look at these companies. Where did he buy in at, and how long ago was it? And they're not going to be $1 billion companies yet.
Well, and for him too, market cap's a big deal because when he scales into a company, he wants to be scaling into high market cap.
Well, what I'm saying is he has a different entry than us, so it is good to do our own research because we could find some stuff he's not in.
Right.
Yeah, I don't want to go. I'm not going to be investing in any of the companies that he's in at the moment. Probably. Like, not interested in any of them because there's still going to be probably those 15% yearly returns potentially averaged out over 5-10 years, like what he's saying.
Yeah.
But it's not going to be the 100 or 1,000% returns.
Okay, he has it here, average buy price. So he's 39. Up 333% on his Apple position.
Damn.
Yep.
Nice. Damn. What's this?
He's down on
Kraft. 52.6%.
And he bought that in 2023.
Oh, that's just recently.
So these are all 2023 actually.
That's actually interesting, Kraft.
That one actually might be interesting to buy into or look at. Yeah, because he's down. If he's still in it, then it might still be actually really good.
I wonder why he's still in it. It's down 50% for him.
I digress. What I said earlier.
What? Oh,
not investing in anything. Well, Kraft might be a good one to look into if he's down 30%.
Right.
Let's find out the reason.
Well, I don't know what time frame this is over, but
that might be a great time to buy it.
So he bought it just a few months ago, right?
Yeah.
2020.
Oh, Heinz?
About 4 months.
That's Heinz.
Yeah.
Ketchup.
Yep.
Let's look into it.
But Kraft makes a crap ton of products.
I wonder what happened.
Yeah, that's interesting.
And because if something big happened, that's like he's like that company that was producing oil. Like vegetable oil or something like that he invested in, he basically will be like he didn't invest, like there was a big scandal. Basically they were putting they were putting water in barrels and putting oil on top, and they would dip a stick in there to show it, and they were basically inflating the value of the company scam. And a big scandal happened. The stock price just dumped, but he looked at it and he's like, it's still an overall profitable company.
Right.
He just
even
bought
there was
a crap ton into it and did insanely well.
Yeah, because there is sell the news events on companies that are solid.
You can have a solid business, and those guys are sweating because their stock's tanking for no reason. Like, it's some baloney negative news, and it will rebound. Yeah. And there's faithful investors that are still
Bush Light?
What's up?
Bush
Light. That's how it happened with them.
Well, no, did you, so they got absolutely slaughtered because of Dylan Mulvaney. I think that's how you're saying it. The trans, the deal. And then basically a lot of people were pissed off and sold. Yeah. And shorted them. And I mean, fundamentally, nothing really changed. It's just a perception.
Right. There was a canceling.
Yes, we canceled, but like the American people, or a good portion of it. Yeah.
This is interesting on the charts. They used to be really well.
Yeah.
Wonder what happened. How much going on now? But let's see what else he's in. I'm gonna look at these lower market caps. Okay, he's down on this one.
The thing I was thinking about too with like long term stuff is like you have to almost figure out too how that company's gonna handle inflationary pressures. I don't know.
Well, there's a lot of companies that are buying Bitcoin and putting it on their balance sheet.
Right, like Michael Saylor.
Michael Saylor. Yeah. Not a bad idea to.
No.
I mean, his stock is ridiculously expensive now.
Right. Well, I was listening to someone talk about that, and they said essentially like he's kind of almost like a ETF for Bitcoin, really. He's like a proxy ETF for Bitcoin.
That's insane. Michael Saylor's company is just insane.
Yeah, parabolic. He
bought more Bitcoin recently too.
Yeah, well, he's leveraging the Bitcoin that he's already bought. So he's taking out loans on the Bitcoin he already purchased to buy more Bitcoin every time. I don't know.
He's crazy.
Yeah, but I think it makes a lot of sense.
MicroStrategy is worth more than almost half of S&P 500. It's up 170%. Short seller says it's overvalued.
That's insane.
That short seller's going to be sweating for a while. I mean, I don't know if Jacob's told you, but I leveraged Bitcoin, Riot, and Mara.
He said something about you guys.
The miner stocks have been my most successful by far. Nothing even comes close for me.
And are you waiting? Yeah, go ahead.
I watch Bitcoin first.
Yeah, you wait for that.
All is on Bitcoin, and everything follows Bitcoin, ETH, the altcoins, these miners. Mm-hmm. So you just watch it, make its move, and they lag behind. Uh-huh. Or with what I'm doing currently is the halving's coming up.
Yeah.
So that's a buy the news thing for Bitcoin.
Yep.
Buying Bitcoin for me is not going to make me any money. No. I don't want to do leverage trading with Bitcoin right now. And so the easiest thing for me to do is to simply buy a Riot or Mara.
Or small cap cryptos.
Or you could even buy, But they have the miners on there. Yeah. When Bitcoin goes up by like 10%, historically they would go up by like double or triple that percentage.
But they're not doing that like they were
now
before.
That correlation has separated literally the past since it broke all-time highs a few weeks ago, and I think that had to do with the ETFs. I think all the money that was originally in Bitcoin miners, everyone's like,
went to the ETF.
Go to the ETF. Why wouldn't you? It's way safer if you want your money in Bitcoin.
Right. Okay. So because people would originally they'd go, okay, I want to be in Bitcoin, but I don't really want to.
That's how I found them originally years ago. Yeah. Was like I didn't have a crypto account at the time. I had a stock account, and I just wanted to like mess around and see what was up.
Right.
And so they only had I think Ethereum, Litecoin, and Bitcoin on Robinhood back then.
Right.
So I was just looking it up, just whatever, until I found YouTubers and whatever else talking about these miners, like buy the shovel, not the gold. Like don't whatever the saying is.
Buy the shovel.
In the gold rush, you gotta buy the shovel. Yeah. So I was like, that makes sense to me.
Yeah.
And so it actually worked. They went penny stock and they went parabolic, and then with options that now leverages it even more.
Right.
So now your leverage stock, so Bitcoin's up 5%, your stock is up 20%, and your options up 500%. Like that's about what it would look like.
That's a good strategy. I like that.
And then if Bitcoin drops by 5%, it could drop reverse, by 20%, and your option could go to zero.
Right. So but your option's going to zero. You're not going. I mean, that's not. It seems like your downside is not as terrible.
Yeah, it depends what you do. I think actually could still be an okay option. Not necessarily the miners, but like anything Bitcoin related in the market. If you buy long-term calls, it could work out if you're bullish long-term for Bitcoin.
Right. Like
as long as you're buying out long enough, because Bitcoin has no. Bitcoin is the least predictable thing that we have on the market at this point.
Yeah.
Like it could literally just wipe everybody out in like 2 days and then come back right back up.
Right. Yeah. Because it could go down 20,000 and shoot to 100.
And it's not going to even surprise anybody at this point.
It's a bloodbath.
Yeah. It's the perfect thing for trading, really.
That's like cost dollar average. Like if you just cost dollar average it out, like I think that's the best way to go.
Sailor, he's been doing that with his money since the beginning. Everyone laughed at him, but his holdings just keep going up.
I just saw a video with this dude on X. He's like, dude, I'm telling you guys, they just spend $1 on Bitcoin right now in 2013. He's like, you'll be a millionaire in 2025 or 2024.
No.
Yeah, it's tough though. It's tough.
That video got popular because everyone's like, bro. If only.
Have you guys ever listened to just Michael Saylor rant for like an hour about Bitcoin? Yeah. Oh, it's great. I mean, he's just so logical and so thorough with what he's saying about Bitcoin. I still don't really like with Bitcoin. I feel like who knows? Like I feel like it could be a psyop type thing. But
it's the ultimate. Yeah.
It's the ultimate black box of we just don't could be Pandora's box where everything.
If you want to trade, then that's the place to do it.
It is. Yeah, crypto in general, but yeah. Cool. Well.
Yeah, I'm ready to wrap this up.
Ready to wrap it up? Thanks for listening to us rant
we're all on the risk.
This is like an
This is actually no. Actually, you know what it does? It seems like I think you're probably like more short term and most risky in some ways, even though you can be really profitable. I don't know. I haven't looked at anything you've done, but and then Jacob's more like Warren Buffett. I'm kind of like I like both.
I'm risking stuff. Like I lost lost money on an option just 2 weeks ago. Yeah.
Hey.
Yeah.
Cheers for losing.
High five.
I mean, I started out in the stock market thinking I was going to be long term because I didn't know anything about trading. So. Yeah. But it was very disappointing.
So wait, have you gone through and looked at not to continue this video necessarily, but have you've it seems like you got into like pattern day trading too a little bit because you're pointing out like that could be a China or whatever.
The charting's like.
It's interesting to me, but it's also kind of like
there's charting when you're doing day trading. It's pretty important,
right?
Because especially because I notice dollar amounts usually make a big difference in day trading. So like when something's at $17.99, it cannot get to 18. You know what I mean?
Right.
And like you're watching all day trying to get to 18.
Right, and that's a resistance level.
And that's your resistance, and you're just like. It's not making it over 18 until it suddenly makes it over 18.
And then you need to buy in because now it's gonna. Or it could go up in the drop. Yeah. But that could be a support on the way back down, essentially. And you're looking for that. Yeah.
Because I would a lot of times see, something fall, and then you're just like, you're losing money, so you want to sell it. But then it goes back up, and it keeps going down. And as long as it doesn't break your support, I would usually hold it.
Right. Yeah. You pick out a support, and you go, okay, I'm going to buy in maybe here or a little bit later, but I'm going to buy in. And if it drops down below that, I'm out.
There's also some things that I picked up on my own that I didn't learn, which is like, so it might be total baloney, but here it is.
Okay.
Watching Robinhood will show you if it's green for the day or red for the day. It will show you compared to what it closed at. And a lot of times you'll see a stock, it will go green, and you'll see it fall. And just watch. As soon as that stock turns red, it's a bloodbath.
Because everybody's
there's a lot of retail traders on there, and I've noticed that it actually does make a difference as a support in itself. That color is the fact that it broke below.
It's a psychological switch for
even because there's an after hours. So between close at 4 and open at 9:30, your stock could go up a bunch. Right, and so, but that's actually a facade in my opinion.
So then you're looking at it as soon as it turns red.
Hello. All right.
We got other people.
See y'all. We're gonna wrap this podcast up. Take it easy.
All right, that was.
Hope y'all have a great week.
Yeah, Hormetic Monks out.
Peace.
Don't have too much fun.
Yep.